the key factors that could drive a strong growth cycle. Bitcoin, the first cryptocurrency in the world, has gone through more than a decade of volatility to establish itself as a global asset. From an experimental idea within the technology community, Bitcoin has evolved into a focal point for major investment funds, financial institutions, and even governments. As we move into the year 2026, many analysts believe that Bitcoin is entering a critical transition phase where multiple factors may converge to create a strong and potentially more sustainable growth trend than in previous cycles. The first and most fundamental factor is Bitcoin's halving mechanism. Halving is an event that reduces the block reward for miners by half and occurs approximately every 4 years. After the most recent halving, the amount of new Bitcoin created each day decreased significantly. This reduction tightens supply, while the total maximum supply remains capped at 21 million coins. Historically, post-halving periods have often been followed by strong price increases, not immediately, but gradually as the market begins to fully absorb the effects of reduced supply. By 2026, this scarcity effect is expected to become more evident as fewer Bitcoins are available for trading on the open market. The second major factor is institutional adoption and the inflow of large-scale capital. In recent years, Bitcoin has become accessible through traditional financial products such as spot Bitcoin exchange-traded funds. These products allow institutional and retail investors to gain exposure to Bitcoin without the need to directly hold or manage digital wallets. As technical barriers are removed, significant capital has begun flowing into Bitcoin as part of long-term portfolio diversification strategies. Many companies now view Bitcoin as a strategic reserve asset, similar to gold, used to protect value against inflation and currency devaluation. By 2026, this trend is expected to accelerate as more traditional financial institutions formally integrate Bitcoin into their investment frameworks. Another important driver is the increasing clarity of the regulatory environment. In its early years, the cryptocurrency market faced uncertainty due to unclear regulations and legal concerns. Over time, however, many countries have developed clearer regulatory frameworks, classifying Bitcoin as an asset rather than a threat to financial stability. This regulatory clarity reduces risk for large investors and opens the door for pension funds, insurance companies, and major financial entities to participate. The year 2026 may represent a stage where Bitcoin reaches greater regulatory maturity, providing a foundation for long-term and stable capital inflows. Within the broader global macroeconomic landscape, Bitcoin is increasingly described as digital gold. As inflation, rising public debt, and geopolitical instability continue to challenge traditional financial systems, investors are seeking assets that can preserve value outside fiat currencies. Bitcoin's decentralized nature, limited supply, and independence from central banks make it an attractive alternative. For many investors, Bitcoin is no longer viewed purely as a speculative instrument, but as a long-term hedge against economic uncertainty. By 2026, this narrative is likely to become even stronger as public and institutional perception continues to evolve. Despite these positive growth drivers, Bitcoin remains a highly volatile asset. The market may experience sharp corrections due to investor sentiment shifts, global monetary policy changes, or unexpected events. The expansion of derivatives trading in leveraged positions can further amplify short-term price fluctuations. Therefore, while 2026 may offer significant opportunities, it will also require investors to understand risk clearly and apply disciplined capital management strategies. In summary, Bitcoin in 2026 is expected to enter a pivotal phase characterized by increasing scarcity, expanding institutional participation, clearer regulatory frameworks, and a strengthening role as a global store of value. This is unlikely to be a straight upward path, but rather a journey marked by cycles of growth and correction. However, over the long term, Bitcoin appears to be moving closer to its position as a truly global asset. It is within this period of transformation that informed investors may find the most meaningful opportunities.